What's going on, guys? Welcome back to Modern Options. Today I want to talk to you about why a losing trade is actually a successful trade. In order to be profitable long term, you are going to have to follow a set of rules. Any YouTuber that trades will tell you that, or any successful trader will be able to tell you that. You are not going to ever find a strategy that is 100% tried and true. If anyone tells you that they have that, they're lying to you, and don't pay for any of their crap that they're selling, or don't listen to what they're saying. You will make losses along the way. You will pick losing trades. The key is to be able to have them be small and not let them just blow up your entire account. So long as you continue to trade your system that has proven results, over time, your probability will start to go up and you will be successful in the long run. So let's go ahead and think or swim, and I'll show you what I'm talking about. So let's go back. We'll just recap a few of my last trades, and we'll start with the 27th of September. So on this day, oil was up in the morning, tech was also down, so it was a bit of a muted open. I opened up a call credit spread for 44.65 and 44.70, and I opened this at 10.06. On this day, I took in 70 cents worth of credit, and it traded within this range throughout the day. It started to go up towards my stop, but not quite enough to stop me out. So it kept trading sideways throughout the day, and I was able to close this for 10 cents. It was a little close for my comfort, so I didn't want it to actually go up for power hour or any sort of market news come out and then just have me stopped out for the day. So I went ahead and closed it for 10 cents. Since I opened it for 70 cents, that netted me 60 bucks profit for the day. So the system worked. I knew I could close out my trade for a profit and not risk having any more of my capital taken away from me when it was a winner for the majority of the day. So I followed the plan and it worked. All right, so let's move on to Wednesday. On this day, there was still a bit of mixed feelings within the market. However, it started off strong, trying to recover from Tuesday's lows. And there was still no payments being made on Evergrande, and then still uncertainty with the debt ceiling. So there was this initial bit of a downtrend, but it started to quickly reverse and head up into what I thought was a little bit of a consolidation pattern in the morning, and then I thought it would continue to go up. So I opened this about 10:11. It was a put credit spread. I sold the 43.50 and bought the 43.45, and I opened this up for, it was on the 29th. So I opened this up, I tried a bunch of different fills, guys, and I actually got filled for 70 cents on this. So I thought the trend would continue to go up, but it did not go in my favor. So it started to trend downward and downward until I was finally stopped out at 12.24 for 2x credit. So got stopped out for 145, so a loss of 70 bucks. So that sucks to see, because as you can see, it would have continued on and expired worthless at the end of the day. But I didn't know what was going to happen. I didn't know if it was going to continue in a downtrend, so I took the loss and I went on to make another trade. You have to keep doing that with these trades, otherwise you're going to end up making a loss. So moving on to Friday's trade, another very unfortunate story. So this day I also opened up a put credit spread. Biden signed a bill the night before preventing the government from shutting down, so that was a bit of some bullish news. But the morning had a little bit of a sell-off, still with uncertainties with Evergrande. But I thought that the bill news would possibly push us higher. So I ended up selling a 42.70 and 42.60 put credit spread, and I opened this at 10.14, and I took in, let's see, on the first, I took in $1 of credit. And guys, I think I have the absolute worst timing in the world on the 1 minute chart. Let's look at this right here. It was floating around, only going from 43.07 to the highest at 43.14. So moving up and down about 7 points or so. And it was about here at 43.13 that I decided to open up this put credit spread. Not even 30 seconds later, guys, look at this candle. Went from 43.11 all the way down to 42.99. Dropped over 10 points, literally the moment after I opened a put credit spread. I probably could have got a lot more for that put credit spread if I just waited one more minute, but I had no idea that was going to happen. That's just the way that it works. And I got stopped out 3 minutes later at 10:17. That really stings on that day. And then it continued to rise up throughout the day. After MRK announced a COVID pill, everyone ate up that news. What's even worse is that it would have expired totally out of the money, almost by 100 points, guys. And I would have kept that $100 that I took in the morning. And I just waited possibly 5 more minutes and done a spread possibly 10 to 20 points lower, would have been good. But I stuck to the plan and I stopped myself out. That initial sell-off could have kept going down. Nobody knew that. Nobody knew what would happen. I just had to eat that bullet and keep going on. So I show you all this to tell you a trade that happened in the next week. So let's go ahead and skip over to Wednesday's trade. So on Wednesday, there was a weak open with the fear of US debt default, and it started to trend lower. So I saw this trend and there wasn't any sign of it making a reversal. You can see the trend started about 945, continued to go down, tried to come back and touch the resistance line around 958, and then continued lower. I thought this was a pretty safe bet that I could do a call credit spread for the day. So I sold the 43.30 and bought the 43.35. And I took in, this was on the 6th. So on the 6th, I took in, tried a few times until I got 70 cents worth of credit. So I took in 70 cents, about 10:03, and then it can, again, some bad timing. It literally started to go up as soon as I sold that call credit spread. And what happened? 10:14, I got stopped out again. Guys, you have to do this. Watch what happens. Continued on throughout the day. Man, I thought, the same thing's about to happen to me that did the last two trades. It would go near it, and then expire worthless. Not today, though. Today, it continued to go on, and it actually closed above my long strike. What did it close at? It closed at 43.64, almost 30 points above my call strike. So this saved me that day. That's why this was a successful trade, guys. That's why the past two trades, even though they were losses, all these were losses, but they were successful trades. It keeps me in the game, and I'm allowed to trade the next day. Had I not stuck to my stop loss and just hoped that it would happen, I would have lost $430 that day instead of $70. That's more than all three of my past trades combined with their losses. I'm not even worried about it because I know that this plan is successful and I just have to make quality trades. Sometimes I got some bad fills, maybe I'm looking at data wrong, but I know over time I will be successful with this strategy. I'm trying to be as honest as I can with you guys with this channel, the ups, the downs, and everything in between. So if you find that useful, go ahead and give a like on the video. I would really appreciate you guys. And let me know down below if there's any specific rules that you like to follow that saved your butt a few times. So until next time, I'll see you in the next one.